to Madam Fakila and my class members. Today, my group and I will present about exchange traded bond and sukuk. I will introduce myself and my group members. My name is Sakuntala Venugopal. My matrix number is 23DIB19F2066. My second group member is Farah Nabila binti Zaini. Matrix number is 23DIB19F2022. Third group member is Fauzia binti Sulaiman, 23DIB19F2058. The content. First presenter, which is myself, will present about concept ETBS, bond and sukuk. Second presenter is Farah Nabila, will present about advantage, exchange traded bond and sukuk, player who are the issuer. Third presenter, Fauzia binti Sulaiman, will present about ETBS versus shares, product comparison. Exchange trade bond and sukuk. First, exchange traded bonds and sukuk (ETBS) are fixed income securities, also known as bonds or sukuk. Then, that are listed and traded on the stock exchange. ETBS are issued either by companies or governments, the issuer to raise funds for their needs. ETBS having varying structures such as fixed rate, floating rate, hybrids. Exchange trade bonds and sukuk, or ETBS for short, are bonds or sukuk that are traded on Bursa Malaysia with smaller fractions. With the availability of this ETBS, this means that investment in fixed income assets to do not necessarily require high capital. With a capital as low as 1,000 ringgit, excluding transaction cost, we can invest in that asset class. By using an existing CDS account, we can buy and sell ETBS similarly to buying and selling shares on Bursa Malaysia. Next, bond. A bond is a type of fixed income security that companies or government, also known as the issuer, issues to investors to meet their financial needs. It also known as a debt security, as the investor or bondholder essentially buys the debt of the issuer. In this instance, the bondholder can be treated like a lender to the issuer, and the agreement of the borrowing is the bond, just like the bank when you take a loan. The amount loaned is called the principal amount. Such as bond fall under the fixed income investment type. This means that the profit earned by the investor is fixed at the beginning of the investment, and it will not change throughout the investment period, and it will difficult to be exposed to the sentiment risk. In a nutshell, this bond investment is like us lending to a bond issuer, consisting either of the government of the country itself or a company. Investment is bonds. Bonds can be profitable in two ways, namely through the payment of coupon and also an increase in the price of the bond. Moreover, sukuk. Sukuk, plural of sa, is an Arabic word which means certificate. When we talk about sukuk, we refer to certificates issued under Sharia principle or Islamic principle. Sukuk are also used to raise capital. However, the issuer would issue a promissory note, letter of undertaking (LOU) with assets backing the promissory note, unlike a bond issuance. When dealing with sukuk, the return on the certificates are referred as a dividend payment instead of coupon payment. Such as sukuk in Islamic financial certificate that takes on the same concept as bond in Western finance. SUKUK issued must comply with Islamic law known as Sharia. Now that we know what bonds and SUKUK are, let's see what are available of retail investor like us.
Next, I will continue about the players. Who are the issues? There are two types of issues. First, governments and two, corporations. Government bonds and SUKUK issued by the government and it is backed or guaranteed by the government. Government bonds and SUKUK do not have rating. Governments borrow money to build infrastructure, di mana penerbit syarikat atau pertubuhan kerajaan yang menerbitkan bond atau sukuk kepada pelabur bagi membolehkan pengumpulan dana tujuan untuk operasi, pengembangan dan juga keperluan. Kerajaan juga meminjam wang untuk membina infrastruktur. For corporation, corporate bonds can be further broken into the following depending on the guarantee and thus the risk of the credit being offered. Companies may borrow money for finance project and initiative, di mana bond korporat dapat dilanjutkan dipecahkan kepada beberapa perkara berikut bergantung pada jaminan dan sehingga risiko kredit menjamin ditawarkan. Syarikat boleh meminjam wang untuk membiayai projek dan juga inisiatif. Next, I will talk about the advantages of exchange traded bond and SUKUK ETBS. Flexibility and easy for trading. Buying and selling of ETBS is easy as trading in shares at Bursa Malaysia, yang membawa maksud kepada flexibility dan juga mudah didagang. Pembelian dan penjualan ETBS adalah mudah kerana berdagang saham di Bursa Malaysia. Second, transparency. Investors have access to real-time price and volumes as ETBS is listed on the bourse. Investors can continuously monitor and receive up-to-date information on their investment. ETBS disenaraikan di bursa, maka membolehkan para pelabur memantau pelaburan mereka secara berterusan dan menerima maklumat yang terkini. Third, diversification. Investor can diversify their portfolio to include ETBS to complement their investment in other asset classes such as equities, derivatives, unit trust, and REITs. Pelabur dapat mempelbagaikan portfolio mereka untuk memasarkan ETBS bagi melengkapkan pelaburan mereka dalam kumpulan aset yang lain seperti equity, derivative, unit amanah dan lain-lain. And the last one, additional income stream. Investor can get benefit from a steady income stream through regular coupon or dividend payments. Pelabur boleh mendapatkan keuntungan dari aliran pendapatan yang stabil melalui pembayaran kupon biasa. Kupon ini adalah membawa maksud kepada amount faedah yang akan diterima oleh pemegang bond melebihi amount principal.
In bond or sukuk, number one is bond or sukuk are debt securities, which is a bond is normally a long-term debt securities offered by company or government the issuer to investor to meet their financing needs. A bond that is issued in compliance with Sharia principle is known as sukuk. While shares, stock are equity securities, which is equity securities are financial assets that represent shares of a corporation. Number two, at bond or sukuk is bond sukuk holder. They are the owner of a bond asset and do not have rights to the ownership of the company, which is when investors buy bonds or sukuk, they become bond holders or sukuk holders. They are entitled to receive periodic coupon or return on the principal or nominal amount raised by the issuer, and upon maturity, the principal amount will be returned to the bond holder or sukuk holder. While in shares, is shareholder and owner of the company. They are the more prevalent type of stockholder and they have the right to vote on matter concerning the company as they have control over how the company is managed. They have the right to file a class action lawsuit against the company for any wrongdoing that can potentially harm the organization. Number three, in bond or sukuk, steady flow of payment known as coupon dividend, that is the bondholder will generally receive an interest on the principal amount. This amount is called the coupon payment and it is generally expressed as a percentage of the principal value. while in shares, dividend payment based on the policy and performance of the company. When a company makes a profit, they need to make a decision on what to do with it. They can either retain the profits in the company or they can distribute the money to shareholders in the form of dividend. Number 4, in bond or SUKUK is generally less volatile. It is because this happens when the issuer is unable to pay the coupon payment on the coupon date or the principal amount to the lender at maturity. Government bonds and SUKUK are backed by the central government, thus deemed to have a low credit risk, while in shares will impact by market volatility and force because its underlying factors affecting the stock market, which consists of economic growth, interest rate, stability, confidence and expectations, bandwagon effects, related markets and price to earning ratios. Number 5, in bond or SUKUK is the limit of maturity period, and in shares is do not have a maturity volatility and forces.